The FOMC two-day meeting ends today around 2:15. We're going to hear from Bernanke. The market seems to be pricing in some stimulus action coming. What do you think we're going to hear?
You know, look, we're in a bad phase for the Fed, which is that whatever they do won't be enough because we get jobless claims that weren't that good. We continue to be in a situation where it just doesn't seem like anyone wants to hire. And he can't control hiring. What his rates do are make it so that more homes can be bought, but he can't force banks to make loans that the regulators, the examiners don't want to be made. You got to go through the different segments of the economy that he can impact. He can't impact retail, but retail's doing quite well. He can't impact the price of gasoline. I mean, we always try to figure out, what it will do to the overall market, and I think that's simplistic. You have to analyze what he can do and what he can't do, even in good times. Where the Fed has many rates that he can cut. And so, I know that everyone wants to focus on it. I totally get that. But I like to focus on earnings. And what he does is make it so that if you have more earnings, you can raise the dividend and therefore generate income, which is ultimately the impact that he has on stocks because you can't get income from bonds.
Okay, and then how do we get corporations, though, to start spending that money and start hiring? Do we have to get past the election?
There's no reason for them to. They're trying to make money. They're trying to be profitable. There's a lot of no-growth areas. I mean, for the last decade, everyone has chased the emerging markets, okay? And emerging markets are bad. There's not a lot of business being done there versus in terms of growth. Some of the domestic companies have chased the retail customer, and that's been working if you got the right ones. But he can't control Ford's European division, and he can't control GM's European division. These are companies that are doing badly away from here. And one of the things that I think, we always hear small businesses that create, and we love the small businessman. But that's exaggerated too. I mean, what you need to see is a consensus that next year will be better than this year. And there's no reason to think that it will be. Now, I look at profits, and I can come up with a million reasons why they will be, but we're not trading the economy, and we're not trading. People want to. This is, if you go back in time, these rate meetings were not that important. And I'm telling you they're not that important now. But because we have so much journalism, the surfeit of journalism makes these meetings more important than they are.
Okay.
This market has fewer players.
We're coming into a Monday where we're going to
enter in a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.